Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out today by looking at Dennis Gartman's chart of the fear index. You can see over the last 3 years we have reached levels that we've not seen in a very, very long time. However, this 18% correction we're seeing in the S&P is quite normal. We've shown this several times over the past few days. We'll show it again today just to show you this is not the end of the world, what's going on here, folks. This is just a normal market that is making a correction. That's pretty much, what we're looking at. Look at Apple, folks. It's given back half of its value in the last, since October. I mean, here's the darling of the stock indices in the NASDAQ anyway. And look what's happened. But this has been the worst December in the history since 1931, I believe, and the worst Christmas Eve ever. But remember, that's very, very thin trading on Christmas Eve, and that can influence the markets. Folks, I'm going to give you my 2 cents worth of what I'm looking at here, because this is when I became, really bearish this stuff way back in late August, early September. One of the things that I was watching, of course, was the banking index, because of the way that it was acting and making these beautiful patterns that we've been seeing. But if we look at this banking index here on the weekly chart, this is where we closed on Friday at 80.78. That is the 61% retracement of the low from 2016. It's also the high that we made in 2015. And more important than that, in my opinion, is the fact that it is the 382 retracement from the low in 2009. So there's three major numbers coming in here at 80.78 here in the banking index. This is where our problem lies, folks. It's not in the stock market, it's in the bond market, and the banks are exposed to some type of a risk that they have not divulged to us as of yet. We've seen this. One of the most bearish things that we had here over the past year was the junk bond market. And if we take a look at this, this is you can see the head and shoulders pattern that we had in August of last year. Then we had the move down. Then we had the 61% retracement there in early September. But look where it says notice at failure at 1.618. You'll see that ABCD Thunderbolt coming in at 82.50. And we closed there and we gapped below that 1.618 level. And that sent this thing into a spiral where we've dropped another 5% in a matter of 5 days. Folks, that's what happened to the Dow Jones, the NASDAQ, and the S&P on Friday. We went through those 1.618 numbers, and that's what accelerated the move to the downside. I was surprised that we got below 2460. We actually went a little more than 100 points below that in the S&P. So this is a bear market, folks. We've been saying that for a very long time, and we'll be saying it for a long time. The difference is now we are really ready for a rally. Whether we're going to get it or not, excuse me, remains to be seen. Excuse me. This market has been under a great deal of pressure all during the month of December, and all of the rallies that we've gotten in the S&P have been very, very minor. The biggest rally has been just 60 points, and that is, and we've only rallied, 55 today to get up to, we had a low of 15, 23.15. We rallied up to 23.70. That's within 5 points of that number. But if we can close above 23.75 today, that would be the first time that we've been able to exceed a 60-point rally in the whole month. And that's a very important thing. If you look at that chart here, you'll be able to see it quite easily as you look at it here. Now, this is a smaller time frame chart, just 15 minutes. This is just the last 2 weeks of December. I didn't go all the way back to the high, 2,900, because the chart wouldn't be able to take that much room. But you can see we've dropped 300 handles in the last 200 weeks, the last 2 weeks. We went from 27 down to 23. That's basically 400. So just a little under 400. So, but the biggest rally that we've had all during this time has only been 60 pips. And so far, and we did open lower this morning, or on New Year, on the 26th, we got down to that 23.10 level, and now we've been able to move up a little bit. So it's going to be interesting whether it's trying to make a bottom in here. We will get a rally, and I'll tell you the other, and I won't tell you, I'll suggest to you why this is going to be a pretty good rally. Let's just take a look at the VIX index. Folks, these guys that trade the VIX index most of them are pretty professional, and they're not taking hardly any protection here compared to where they were in January. Look what happened in January. The VIX got to 50. We're trading at 36 as of Friday, and that completes the ABCD pattern at the 61% retracement. And given the fact that we're down 17% now compared to where we were in January, which was nothing, this is not much protection to be taking. So I don't believe the big boys think this is going to be a meltdown from this level. But, you know, when you go down 600 points 2 days in a row in the Dow, that's easily happening. Now, I always felt that the biggest down move in this move would be, you know, 1.618 of 6, which would take it out to about 10 or 1,000 to 1,100 points in the Dow, but we haven't seen that as of yet. And it could be that 1,000 or 1,100 points could be to the upside if the shorts come in and start to cover. But that has not shown any sign of that occurring. So that's what I'm looking at. Remember those 1.618 numbers, folks. When they go below those numbers or above those numbers, you're in unchatted territory, because what you're looking at is you're looking at that chambered nautilus that we look at, you know, that little spiral that is so beautiful. Well, when that goes past 1.618, you're out in the area of 2.618 and pi, 3.14, 4.2. I mean, those are numbers that, you know, we don't see very often. Those are outlier events. Maybe, you know, 2 out of 100 times you're going to see, you know, moves that move beyond 2.618. So we'll see. I wanted to share with you, just in case things get a little hectic here in the next couple of days, I'm going to share with you the circuit breakers that they have in place for the S&P, the Dow Jones, and all the other indices. You'll see here that this is for the ES and the SPX. These are the ones that are main ones right in here. If you want the other ones, you need to go to the CME.com, but these are the big circuit breakers that they watch most closely, and especially in that S&P 500, that's the one that they really watch. So if you're down 7%, there's a halt. If you're down 13%, there's a halt, and if you're down 20%, there's a halt with the notation, please go to your nearest church and pray, because if that happens, we're looking at 1987 all over again. And then you remember what happened after 1987, folks. It was the best buying opportunity of the 1980s, because it stopped exactly at the 60% retracement of the low August the 9th of 1992. We're going to take a break here, pay a few bills, right back. Billy Ray Valentine.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we've got a guest from California. Brent, are you there?
I am, Larry. How are you?
Very good. Merry Christmas to you, my friend. How you been doing?
I've been doing great. Merry Christmas to you as well, and Happy New Year.
You bet. What can I help you with, buddy?
I would like you to, or at least get your opinion on the oil market. I know we came down pretty, more or less straight down from 75, 76
Yes.
down to an area that we held for a while around 50. Then that
Yes.
broke, and we went down to 42. I just want your thoughts if you think we're getting near a bottom here, or what your thoughts are about it.
Well, I posted the chart for the long-term crude oil chart. You were mentioned $77 a barrel. That was a beautiful three-drive pattern, right at the 61% retracement on the weekly chart. The problem is we've come through all of these correction levels like they don't even exist. We had the beautiful 61% retracement at 45.50, and that looked like it was going to hold until they start trading on Monday, and it was down another 5% on Monday. So I don't see any reason to be a buyer of oil down in this area, because the next level to look at, of course, would be the 78% level, and that doesn't come in until 38. So we could easily do that. I mean, there's not any rules that say we can't go back to $32 a barrel that we were, 6 or 7 years ago. But right now, I don't see any bottom at all. There, if you look at a 15-minute chart, you'll be able to find some nice trades because it swings around quite a bit. But for a longer-term bounce, I frankly just don't see it right now, Brent. It's just a straight down move, and you're trying to catch a falling knife. And had a chance on Friday, but we gave it up all on Monday, and that tells you, well, as well as I do, once it goes through those 61% or 1.618 levels, you're in no man's land, and you don't want to stand in front of that. So I would just hold off on the the crude oil. Go look at something that's easy to trade like wheat or the euro or something like that.
That makes sense. Yeah, that's one of those things. You just have to let the thing find a bottom, and yes, it sounds like we're not quite there yet, or at least not showing that.
Yeah.
Okay, well, I appreciate it very much, Larry. Again, have a happy New Year,
keep in touch, my friend. It's great having you on board, and I appreciate your friendship and all the good things you do. Thanks a lot, Brent.
All right, you take care.
You bet.
All right. All right.
Okay. We have a question from someone in the den about going out 10 years and looking at the charts. This seems to be no precedence for this kind of behavior. Well, this happens all the time. I mean, we've had a 17 to 20% correction. We have these all the time. But remember, the market went straight up. It's bound to have some. There were some beautiful patterns forming up there at the top. I mean, my gosh, we were screaming at some of those, in the NASDAQ and the IWM. They were just so very apparent that, you certainly wanted to at least reduce your longs if you didn't want to get short. But this is just a normal correction of what we're seeing here. Just going back, now remember the last couple of years, it's been straight up. But if you look at the S&P, we're only down, I think, around 19% today. On Friday, we were right at the 61% retracement there at 2,400. And then, of course, we broke down to 2317 last night, and now we're trading around 2360 or something like that. So we're in an area where we should find some support, but because of these really strong down moves, we could get a lot more. There's one other thing to factor into this. I said from the very beginning, way back in late August, early September, this was something you're not going to see again in my lifetime, and a lot of you folks out there too, because this is historic what we've seen up in this area. And there was a lot of reasons for it, not just the price patterns. There were other things that were involved. One of which, folks, is this thing about quantitative easing. This has not been a good thing. I mean, they pumped the money supply up to an area where it's crazy. That's why these junk bonds are going nuts. Look at corporate bonds just for a second. Here's where the real problem is. This is a much larger market than the stock market, and here's where the banks are having their problem, is because if you look at this, we had $2.5 trillion back in 2008, and now we have at 2018 we have almost $8 trillion. Now, why are they borrowing money when they're making all kinds of money in their stocks? The reason why is the government made it real easy to borrow at very, very low rates. That's exactly what Japan did. And it sounds like a great deal when markets are going up, but when markets are going down, it doesn't sound like a great deal. I've never been a believer in quantitative easing because I just couldn't quite understand it, but it kept going higher and higher, and eventually these things stop. But we're in these real wild swings right now. These might continue for another few months. That's why I've always recommended, ever since last summer, when the VIX got under 10. I thought that it was, one of the things you put in your back pocket and hold it for a while, because it's got a chance to, do something really spectacular. Remember, VIX got to 90 back in 2008. It got to 50 in 2016, and we're only up to 36 right now, and we're making that ABCD pattern in the VIX. So with the news out of, I think that this news probably is out of the way now. We're probably getting ready for a pretty good correction to the upside, and it should last, I would imagine, a lot longer than most people think. It'll probably last about 5 or 6 weeks, maybe take us up into early February, and we'll see how that happens. The Bradley model is actually showing that also. So whether that becomes a factor or not, we'll have to wait and see. But there's another commodity that's real interesting here that we talk about more often now than here at TFNN, and that is the natural gas. I wanted to bring this up here because this is, hold on a second, and we'll put this up here and take a look at it. All right, there we go. There's natural gas. We had that big move up to the 61% retracement up there around 49, and now we pulled back. This level that we're seeing this morning around 330, it's 339 right now. The low's been 336, I believe. Right around 330, we touched that downtrending line, and that also happens to be a 78% retracement of that low back in 2018. So this is going to be a real interesting area. Okay, Marshall's asking the question, where do I see the bottom of this whole correction? And I'll post it again, Marshall, so you'll take a look at it. And you'll be able to see it right there. Oh, I didn't put it on that one. I had it updated. Shut the front door and raise the rent. Where did I put it? Oh, shucks. Oh, can't believe it. Be darned. I don't know why I didn't do it. Let me put it up here again, and I'll just read it to you. You got it on the newsletter, Marshall. If you go in and just take a look at it. But the real bottom here in the S&P during this next swing is going to be at 1580 is what I'm looking at. That's a much longer term weekly pattern that we've been watching. So I would watch that very closely. Let me double check here to see if I still have it lined up in my file so that I'll be able to review exactly what I posted in the newsletter over the weekend so that we could see this, and then we'll be able to take a look at it. And I believe it'll be here. Hold on here a second. And hopefully we'll get it right here. Yeah, here it is. I'll post it here now, Marshall. You can take a look at it. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to talk just a tiny bit about the currencies here. We've got a really interesting pattern here in the Canadian dollar. And if you'll look at this right here, you'll see that we have completed this ABCD pattern up here at this 136.30 level. Now, on Christmas Eve, after we closed and became Christmas Day, Forex was still trading in some of the countries because it was a Tuesday, and we saw quotes of 136.60 for some reason, and 136.50, 136.59. It was beeping, so I knew that something was happening. However, those quotes were released, were erased, and I have not seen that happen before. I think what they were was just bad trades, and they realized it at Forex and just disapproved them. That would be my guess, but I don't know for sure. They're not showing up on Forex anymore, but on my data service and also Jim Twentyman's data service, which is pretty much impeccable, he had the same thing happen, but they did take those off. So you have to have somebody on the other side of the trade in those markets in order to do it, and that finally has happened. Someone's asked a question about the silver getting up in here. I don't care. It doesn't look bullish for silver right now. Mr. Z saying if it gets above this 1510 level and closes above there, I will certainly say that it has to get up there, but right now it's just completing an ABCD, much like we're doing in gold at the 1282 level. If you look at the hourly chart and the daily chart, you'll see that 1282 level as a very, very important level in the gold market. Now, platinum still doesn't look very good, but at least it's got a chance here, to get to maybe a little bit of a rally, but it's been acting very, very poorly recently. Whether that'll continue or not, remains to be seen. The key here in this S&P is I posted the chart that we've had only two 60-point rallies here during the past several weeks, and that number comes in at 2375, and I believe we've hit 2372 so far today. Oh, we're 2377 already, so we finally got 60 points higher. This has been our biggest rally coming out of this level, and at the same time, the bonds and notes have rolled over a little bit. We made new higher highs in the notes, but we did not do it in the bonds, so there's another indication that we could be looking at a bottom here. But I think that the easiest way to look at a potential bottom is to look at that VIX index, because it completed that ABCD on Friday just spot on, and that should be a spot where you're going to get some type of a respite here from the selling. Well, we're up how much? We're up about what, 40, 10. We're up about 35, 40 points already, and we're up 60 points from the bottom. So we'll watch that very, very closely. 65, 50. What are they saying here? Hold it. Did I make a mistake here? I guess I did. 60 from 10. Yeah, no, that's right. The low was 2310, so it's above that. That's okay. Yeah, the low was 2310. You add 10 to that. Yeah, 75 was the number. We're trading at 79, so that's working pretty much okay. So far, the Canadian dollar's gotten up to 136.18. The number we're looking at is 136.80. So sort of keep an eye on that, because that's another one that looks interesting here from the short side. The pound is still trading about 200 pips above its ABC level at the 78% level on the weekly chart. That was a really beautiful setup pointed out to us by our good friend Mr. Z here in the room once again, like he always does. And it's been a pretty nice run up here, and it looks like it's got a lot more to go. So we'll see if that's going to be the case. Yes, we're bound to get some bounces in some of this stuff, folks, because some of it has been so darn weak that it's just it's truly amazing. But others, you've just got to be really careful, because folks, when these markets start to go down, remember that fear is a greater emotion than greed, because you see the physical characteristics. I won't go over it again because I've done it so many times here, but that's why. And it's the old-fashioned, gee, it's a goodbye here, goodbye there. Pretty soon it's goodbye house, goodbye car, goodbye bank account, goodbye wife, because I went through that in 1974. October of 1974, they cleaned me out, and then they double bottomed in December of 1974 and never looked back. It took me 3.5 years to recover all that, and that's not a fun thing to do, but it was all part of my learning process. And frankly, I would, if I had to go through it again, I probably would do it. I actually would, because I can remember. Well, never mind. Anyway, let's move on here. I hope everyone had a wonderful Christmas, and I want to thank everybody that helped the folks at the Gospel Mission. My goodness, they were just they were ecstatic to see the response that we got. Anyway, let's move on here to take a couple look at one other thing that I think why we're at a bottom here, and this is the Japanese stock market. You'll bring up the Nikkei here. We were down 5% in the Nikkei on the 24th. we were down, just about 2% in the, no, not even 2% in the Dow. Yeah, 2% in the Dow, 2.5%. And the NASDAQ was down 5%. It stopped exactly at the D point, folks. I mean, to the exact tick. And that's at an index that's trading at 20,000. It opened 1,000 higher last night. I don't know where it closed, but that completes that ABCD pattern. And so it's going to be interesting if that's going to be a major bottom or not. I believe we're at a pretty good bottom. And we won't know that for probably another few weeks would be my guess, but that's what it looks like to me is what we got. Oh, we got a caller from Philly. Mr. Z, how are you?
Hey, Mr. Pesavento, good to hear your voice. Glad you're doing the show. I'm guessing you're still on the East Coast.
No, not yet. We're back in Arizona right now, but we'll be moving around soon. We head to Hong Kong pretty soon, but everything's good.
Excellent. Larry, I wanted to touch base with you. And first, just let me say thank you for going over the equity, debt, and currency markets in detail. What you haven't addressed thus far, I wanted to ask you about, and that'd be the ags, be the oil seeds and the grains, and specifically the wheat market. It's my speculation a bottom was put in earlier in December, and that there's been a dip for a couple of days, the past 6-7 trading days. My speculation is that's forming a higher low. You and I are looking at the same patterns, and I'm wondering if there's anything you can add to the speculation one way or another with your conversations recently with either Rich or Cy Monley, please.
Well, we were chatting with Cy on the 23rd, and we were looking at this full moon coming in here that happened on the 22nd, and we had a price objective of 511 in March wheat. We hit 511 on Christmas Eve on the shortened session, and it rallied. I don't know where it rallied about 6 cents. I don't know what it's doing right now, but that was a beautiful 135 pattern. And as you know, those full moons and new moons react really well to the wheat market. So the risk there was very, very small. So what we did now is we just raised our stop to 09. So if it makes a new low after that little bit of a rally, we'll be out of it with a very, very small loss. And the reason why we're doing that is because the emotionalism in so many of these markets is so high that you just don't want to expose yourself to too much risk. Stay with us, John, please. I'd like to talk to you more.
Will do.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back. We're talking with Mr. Z from the Tiger Den. And John, one of the things that Cy mentioned to me last week was the fact that his firm and a lot of his farmers are very, very bullish on the corn market. And I posted the chart for March corn, and you can see the head and shoulders pattern that's here. But it's been actually in a more of an up move since September when they brought out these tariffs. So it's really holding well in face of the tariffs, and he believes that they'll probably make some type of agreement where they'll be able to exchange, soybeans for renminbi and corn and stuff. But I don't know what you're feeling on that.
Yeah, Larry, thanks for showing that corn chart. Before I share my 2 cents, when you mentioned Cy and his firm and his clients being bullish, would that imply that the clients that he works with, he's holding off having them sell last year's crop, looking to sell the crop in January, February, March, hopefully at higher prices? Is that what they're doing?
The very, very good point, John. Very good point, because I've asked him that several times. When they say that they are bullish, they have basically two accounts. 95% of everything they do, they sell in a forward market, because if they know that they can get $3.90 for corn, that's a huge profit for them, and so they take that, and yet they still have maybe 5% that they use for speculative positions. So what he's talking about is basically like an opinion when he talks to, and he's got about 20 people, very large. One guy's got a farm of 250,000 acres, if you can imagine something that big. It's a family operation down in Louisiana, but they have strong opinions because they've been in the business for years. They have a really good trading sense, and they get a feel for what's happening in the international markets. And he adds that into the mix when he's looking at the technical picture, but he relies on the technical picture more than he ever has before. After working with us for 2 years, he's seen that the technicals lead the market, and so that's his parameter that he has. But he said these guys are pretty good, and when they hold back selling the last part of their crop, which they can do, they usually have a pretty good reason for it.
Gotcha. Yeah, that's very helpful input, Larry. I appreciate that. When it comes to the four primary futures traded ag markets, be it wheat, corn, beans, and cotton, as I understand the supplies and current demand levels, wheat, I conclude, has the greatest potential upside, corn slightly behind, and then beans and cotton are less bullish, and those are highly dependent upon the export business out of the U.S. into China. The corn and the wheat, frankly, not so much. And just I come back to the wheat, which you saw that I repurchased this morning. Just reopened here at 9:30 New York time. In that wheat market, the global supply situation has tightened up, on account of some poor weather and growing conditions last year in Russia, in Western Europe, in the United States, and in Australia. And in that wheat market, we saw a peak up near $6 back end of July, and then there's been a beautiful correction lower, which I speculate has finished up. And now looking ahead, of course, growing conditions coming up, that will be pivotal the next 6 months, of course. And, of course, we don't know what that is, but I can focus on the idea that the winter wheat crop that was planted in the U.S., farmers had every intention of planting more last October than they had the prior year on account of the fact that prices had rallied into July, and the price was high enough to warrant planting more. But the southern plains weather in October and November just got excessively wet. And so farmer intentions on planting more were cut short just because a bunch of farmers down that way, you know, Kansas, Oklahoma, Texas, weren't able to get the stuff in the ground just because the soils were too wet. So I'm looking at that ahead and saying, maybe wheat does find cause to rally back to that $6 area, that summer high last year.
It gets certainly good, and those are the factors that they're watching. That wet weather was very, very important in that wheat market. The other market that's they're talking about a little bit is the fact that that hog market, it sold off a little bit here, given the fact we're in the midst of this Asian type flu or whatever it is they're having with the hog problem, and that's been a little bit of a surprise. But with the holiday demand and everything, that might have been the reason. But it needs to hold this level here in hogs if it's going to remain to be bullish.
Yeah, Larry, I had traded hogs from the long side. In fact, you caught the bottom beautifully back last August. I did not get involved that low, but I had been trading it from the long side until like a month ago. And as you correctly point out, there's been a good pullback. And yes, the bullish factor out in that market has been the emergence of ASF, it's called. It's called African swine fever. And it is a disease that's killed some amount of the hog herd in China. We're not getting good information out of China as to the severity of the problem. What we do know is China has indeed come in and bought U.S. pork in the past 30 days in reasonably sizable quantities. The futures market has pulled back on account of futures traders had seen that problem emerging and had essentially front-run the news, got excessively long, and have booked some profits. But what I share with you now is my recollection back in 2014 when there was a different disease. That one hit the U.S. Hog herd. And, here we are in the northern hemisphere in winter. And, that's when animals are closed up and inside of warm barns. And that's the seasonal time when disease spread is the threat of disease spread is greatest, during those winter months. Everybody, closed up in a warm barn. So this pullback in the April and the June hog futures, I'm looking at here closing out this week is trying to rebuy it. So
I think it's a good idea. Listen, thanks for joining us, my friend, and Merry Christmas to you again. Happy New Year.
Happy New Year, Larry. Thanks so much.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. For you folks who are asking me what I think is going to happen to the market, you know, I don't have a crystal ball. I have one, but it's a cloudy son of a gun. I'll tell you, I wouldn't trust it. Anyway, let's take a quick look here at what the S&P is doing here this morning, and this will be my 2 cents worth. We'll take a look here. Hold on. Just get a second here. Oh, just a minute. I got to do something a little bit differently here. Otherwise, I'll have a slight problem. Here we go. Let's get it up here, and you'll see here in the S&P, we made our low down there, 2310. We rallied up today to the exact 61% retracement of the high on Christmas Eve. It was exactly 38% of the high on the 21st, so that's a really key level. This is the largest rally that we've had during this move. We've gone up, 85, what did we get to, 88, what did we get to, 87, so we'll call that 90. So we rallied basically 80 handles. If we can close above 2390 today, that will be the first sign that we've got a pretty good bottom coming in here, because that would be, you know, you'd be going above the 61% retracement, above the 382 retracement, and the fact that we're over this potential really big long-term down move that occurred, that we're almost, you'll notice how close, just to look at this daily here, how close we came to that 1.618 expansion. You'll see we missed it by about 8 points last night, and you'll see that's one of the reasons why we're having this little of a bounce today. But we should get a rally here, because, you know, since the middle of December, we have not rallied very much at all, and we're very oversold. And this is the way it's got to be, folks. Everybody was bullish at the top, you know, and now everybody's bearish at the bottom. You know, you can't find anybody that even wants to buy this stuff. And, you know, they want to buy Apple all day long when it's $1 trillion company. You cut the price in half, 50%, nobody wants to touch it. Remember what Warren Buffett says, you buy them when they're crying and sell them when they're yelling. So this is the time.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.